at your rates than I would. But I would
So if
say
someone
guidance.
is looking to create a note, seller finance, whatever, they obviously get an appraisal. That you guys can pull credit for them. You would underwrite them, make sure that they're, what the credentials are. These are typically all non-QM loans. And then you would do the paper, the collateral, you underwrite it, the whole thing. You would do, and you put the collateral paperwork together, the note or mortgage, right? No note, mortgage, deed of trust, whatever it is for that state. You would create the whole paperwork, and then they would go through that process of closing that deal out, and then do everything else. Um, and then you would direct them to a servicer or recommend that they do a servicer, correct?
Yeah, the servicer was also a piece. I don't know how often your guys take advantage of a sub-servicer once they create that, but that would be my recommendation. A lot of the sub-servicers you can get to take on that foreclosure risk. Depending on the size of your note, and you guys have some meat on those notes, right? You guys are way higher
Yep.
than I am, so you guys
Mhm.
have a little bit to give. So I don't have a sub-servicer because I sell the loans immediately to an investor that then services them. I don't service at all. So I'm not the service lender, the servicer. Uh, but yeah, I would definitely recommend them to get the servicer. And we would fund it as table funded. So we often fund loans where we're doing the whole loan, but the funds are coming from another source, right? The actual
Correct.
liquidity, the actual wire. So we would do everything. Your investors, your people that would be buying the note would get everything, send their wire into title as the table funding, but all the notes and everything would be in our name, right? So all the licensing, everything would be in our name, and you guys would just take it out at the closing table, right? So table funding is
Gotcha.
kind of the channel that we would put this under as a category.
Mhm.
Makes sense. With you mentioned before about bundling up notes, right? That's something I know a lot of our note buyers are, interested in, right? Nathan has a pool of say 50 to
Yeah.
100 notes. Could he take those notes and sell them on the market?
Yeah, well, I mean, you kind of got to have a license in some ways. So, I mean, someone like me could probably help you with that. It depends, right? So, yeah, you got to be careful, right? You got to be fully licensed most of the time. But if you have a takeout in mind, you can usually execute that through an intermediary or whatever. So uh, it all depends on how they're securitized, though. So it takes a whole lot of time to go through those packages and do all the due diligence because you're going to need a third party, right? So you'll need to take all those 50 notes, use a third party due diligence to, make sure it's securitizable, right? And they all meet a standard. And then you can do your typical securitization sale. So yes, they can, but I think the challenge would be, again, as you mentioned, to standardize. This industry doesn't, or your typical private note creator doesn't have a standardized process where everything's going to be
Sure.
the same. And when you're securitizing loans too, you're going to need packages that are in the same general likeness, right? General credit score range, general rate range, right? Usually, so you can sell any notes at a 7 that are between 6.5 and 7.5, as long as the credit's the same and stuff. So you have to build these profiles. So that would just be the challenge. Is we have my company doesn't, but the companies I work with that do this and sell the large securitizations have whole staffs, right? That they go
Sure.
through, get them ready, send them to the third party due diligence. When they come back a couple months later, they have all their stuff to package it and then get it ready to sell, and then they start marketing and taking offers on that package. So it is a lot
So
of work, but if they could get a standardized process, then they could use some third parties to really push them through there, right? So yes, I think they could take advantage. I do think they'll need a little bit of help, most likely for your average.
And how many notes, like if you're going to securitize a portfolio, how many notes would you need before you can start looking at that? Like I imagine 5 is too little, but like what kind
is
of
it
So
the
thing?
it's
number or the amount of the UPB?
it's either, right? So there's
Okay.
there's a lot of liquidity right now. So if you're talking Fannie or Freddie, there's all these rules, right? So Fannie or Freddie, that's not what we're talking about. We're talking about we're talking about basically REITs, right? Real estate investment. We're talking about stock money out there that's going to be
Mhm.
coming through us through some sort of investment bank outlet that's going to provide the liquidity in some way. They'll usually take a little or a lot, right? Especially when we're
Okay.
talking about this non-QM stuff. So there's really not a limit. Technically, yeah, I would say 5 would be kind of the low end. And anything under 1 million wouldn't be worth it, So
Mhm.
you want maybe a 5, 10 million. You could be talking 100 million, you'd be like standard, right? A securitization of 100 to 250 million is pretty standard for them to trade 100 to 250 million at a time. But small time investors, I'm sure they would love your guys' notes because the premium they're going to pay you on the rates that you guys do is just, it's going to be enormous. So
So what do
What
you
kind of
think the
rates are they
typical
looking for?
sales price yield is? What do you
Yeah.
think they're selling at?
So, I mean, like right now, I'm securitizing. Look, here, I have them in the other screen here. So I'm doing notes right now at, so DSCR notes are 7s to 8s. So 7 to 8s is selling, I'm selling them at, par price, right? So I'll securitize it, I'll charge a couple points. I'll do the loan, I'll charge a couple points, and then when they securitize it, they're paying me 100, they're just paying me the full loan amount, right? So I'll charge a couple points, I get the full loan amount, we're selling them at par usually, so 7.5 at par. You guys are at 10, 12, 15%. So you're talking 110, right? If you're trying to sell to that same investor, if you securitize it to the same standard. So yeah, right now I'm selling between 7 and 8 at
Yeah.
100 basically. So the
So
math
we
there.
can take we bought one just recently, it's 11.99.
Yeah.
I can literally turn around and sell the thing at 110, 150% of UPB. And which makes no
Interesting.
sense in our brains. I don't
No.
understand why people do that, but that's
No.
beside the point.
Well, that's where it your guys' industry is way over here and we're way over here on like the super
Yeah.
strict side because it's a lot of work for me. It takes me, when they say it takes 30 days to close a loan, it's not me not working, right? And it's not me personally, but it's not my team not working. There's a lot of stuff that you don't see when you're the customer, and you guys probably don't do as the typical, lender, private lender, I guess you would say, whatever role you want to put yourself in. So it's hard. So for you to get to where we are is going to be a challenge. There's a gap. But if you can get there, and I mean, notes are notes, right? So the market's the market, the price is the price. If your note is at 12%, my note's at 8%, it's the same exact borrower, same exact profile, same exact property, they're going to pay you more for yours, right? It's a no-brainer. So there's liquidity out there. There's hundreds of millions, billions of dollars out there in money that wants these loans and wants your guys' yields. So yeah, I mean, there's a big opportunity there to connect dots. It's just a challenge.
This is why I love doing our show, because the topic goes one way and then we go a completely different direction because we don't know what's going to come out of these shows. I promise
we didn't talk about this before, did we?
No.
Right? We don't prep for we
prep
prep for a topic, and then these kind of things come up and our brains start going, which is awesome, right? So Nathan,
you said like it's a 30, 60-day process to get it to that securitized product. So obviously there's time in there. What's the cost to get that done, give or take?
I mean, we're paying usually probably $2,000 a loan in costs. So, that would be my cost. So obviously if I'm going to do this for someone else, there'd be, costs in addition to that. So that's what I was telling you guys before. It usually costs about $1,500 in underwriting processing type fees to if I use a third party or if I use it in-house. And then we use typically a law firm to draft all of our documents and do all the closing stuff. And that's usually about $500. So about $2,000 what I pay, but I'm doing hundreds of loans. So, if your average investor does one a year, they might, expect a little bit different pricing than that. But that's kind of the fixed cost. Services, you charge the borrower for typically as much services as you can. So I try to, pass those costs, the appraisal and obviously all that stuff. So any of the services we can legally charge for, we will. Any of the services that we can't, what's an example? Like Fraud Guard. You mentioned the fraud stuff. We use Fraud Guard as an industry standard. And that, costs $50 a file, but we can't charge a borrower for that because that's for our due diligence, right? It's not a borrower cost. So yeah, I mean, it's not that expensive to do. It's more of the work and the guidelines. So we're partnering with an investor who says, here's the guidelines, right? Here's what you have to underwrite to. Then we go and get our underwriter, get our processor, get our file together, right? And it costs us, as you mentioned, $2,000 plus to get all those people in place. But then those people still got to do all the work. And then, I have 10 different staff members to help that process as well. So there's a lot of overhead. But the actual per file cost is not that expensive. It's more of having a system and a structure in place and those written guidelines where everything is exactly by the guides, right? We have to have a clear fraud guard on every single file. every single alert of any kind has to be cleared. And sometimes clearing one fraud alert could take 100 documents, right? We might have to go to a bankruptcy case from years ago, get the whole case to confirm that the borrower actually did, clear the full bankruptcy and stuff, right? So it might have not, the state didn't file whatever they needed to file to clear it. We get the paperwork from the attorney says we sent it to the state didn't do it. You could get stuck for a month in one little tiny condition, and even a DSCR loan has to have a clear fraud, right? So
Yeah.
it can
So
get quick, but it can also get wide, right? So that's where the challenge is. If you have that structure and you build that securitization, that standard where everything is 100% fraud guard cleared, then you know that you can securitize that note, which sometimes it's easy, sometimes it's super hard, takes the borrower time, takes less time, takes a lot of work from my admin staff. Not the underwriter's not going to do that. I paid the fee to. The law firm's not going to do that. It's the administrative task, and your guys probably couldn't do this on their own, so they would probably need someone like us that knows what they're doing. But it's not a huge cost. I mean, I guess that's what I want to say is it's more work and knowledge and structure than it is